Greetings, members one and all of the Salivation Nation. Will gold and silver soar before the end of the year? Let's explore. I'm going to be referencing an article here from Numismatic News that talks about this. You know that I've made my predictions and have stuck to them despite lower gold and especially silver prices. In fact, as of the recording of this video, we have seen gold and silver prices, they are flat. Gold is just up just $3.70. It's now still under $1,750. Silver is at $22.44, well under $22.50, down 16 cents on the day. The only other metal that's up other than gold slightly is rhodium. Rhodium kind of acts on its own, but it was struggling there for a while too. But now we have to ask the question is, will they soar before the end of the year, as I had predicted? Well, this article from Numismatic News by Patrick Heller talks about this, and he expected that gold and silver prices would close the year significantly above where they ended in 2020. He's not alone. Many of us thought the same thing. As this is being written on the afternoon of this article, by the way, was written just hours before this broadcast, gold's price is almost 7% lower than it ended last year, while silver was down more than 14%. There are lots of reasons to expect gold and silver prices to be much higher in the long term than they are today. Gold and silver, as we know, are traditional safe haven assets, protecting against the decline and collapse of fiat paper currencies. Over history, the mean life of a fiat currency before it fails is 40 years, while the median life is about 25 years. Fiat currencies tend to lose value faster and collapse sooner when governments ramp up their spending, which has happened worldwide in 2021. Governments and central banks have almost all abandoned any pretense of fiscal stability or responsibility. The value of other financial assets, such as stocks and bonds, are being propped up by massive inflation of the money supply. There are even fresh developments this year which should have helped push gold and silver. On the 1st of July, the first of the new Basel III bank regulations took effect, which had a slight impact of minimizing the amount of paper gold trading by banks that did not hold physical metals to cover their liabilities. In the past week, Evergrande Group in China, that nation's largest mortgage company, actually second largest, was on the brink of default on making interest payments on its $100 billion of debts owed to more than 120 banks worldwide, or its total of $300 billion in liabilities. The impact of China's government last Friday barring Evergrande from access to overnight loans is already resulting in hundreds of billions of global stock losses, although they do have some time before some of that's owed before they go into default. Under current global financial conditions, it would make sense for gold and silver prices to be up sharply year to date, but decades of watching precious metals and other financial markets makes the author realize that what we ought to happen does not necessarily match what comes to pass. The reason that common sense doesn't necessarily correlate to real world gold and silver price movements is because only a tiny fraction of these metals being bought and sold are settled by delivery of physical metals. The derivatives market rears its ugly head. 95% of the global gold and silver trading is in the form of paper contracts. Now that is intriguing. I didn't know it was that high. We'll take him for his word. Even for contracts supposedly settled for physical metal, most of them are settled by paper, or also settled by paper. And certainly that does happen. You've heard me talk about that before. When people buy an ETF or an electronic representation of a metal, well, they do it for they essentially do it for ease of use. It's easier to deal. We don't have to deal with the metal. You can just cash it out. It's convenient. It's a convenience factor. so it's not really tested. The high percentage of EFP exchange for physical gold and silver settlements in the COMEX signals a major shortage of physical metal available in the market, is what he's saying here with some of these things. But metal does flow in and out of that enterprise on a constant basis. It's really kind of hard to really gauge how much is there at any particular point in time. In addition to a high percentage of gold and silver trading involving paper contracts, a settlement in paper forms, the prices are also influenced by the trading of derivatives contracts. By these various means, it would be possible to make it appear that far more gold and silver inventories are available in the market than they actually in physical form. And that certainly is a problem. And it's clear to the author that there's been so much behind-the-scenes suppression of gold and silver prices since thus far in 2021 that they both may finish the year below where they were at the end of 2020. If they do, that merely involves the odds that they will rise strongly in 2022. Now, I do disagree with that last statement because we've been here before. We've seen this happen before where the markets are, that the prices go down and doesn't make sense. And why doesn't it make sense? Because there's a lot more complexity in the markets than most think. So they get frustrated and automatically blame suppression. It's a cabal. But there's not really been much evidence of that. But nonetheless, we are seeing a really heavily inflated derivative market, and there is manipulation within financial institutions for sure. There's no question, but that manipulation works both ways. But in a sense, it may be more profitable in some ways for them for silver price to be down or gold price to be down. But nonetheless, the author really doesn't answer the question as to will they soar before the end of the year. He speculates that they probably won't because of what's been going on in these different institutions and the COMEX. Now, I do believe that the COMEX should probably be a little bit more transparent, or maybe make it easier to understand some of the numbers that come out of there, and that way they can't be misinterpreted or tweaked or whatever to fit an agenda. And that's one thing we have to be careful of, because if we're of the mind and we're utterly convinced that there's price suppression, if the price never goes up or doesn't go up in time, you're going to set yourself up for massive disappointment. And that's something that we don't want. We don't want to be disappointed by our metals. We don't want to be surprised and shocked by them. We want them to do what they have done historically, and that is to preserve our wealth, not to make us rich, not to give us any edge, but just to be as a provision in case of economic instability. Think of it as a savings account. And though the word money was not used anywhere in this article, we do see it as money, hibernating money nonetheless, but an asset that will certainly preserve your wealth, but an asset that is also money. And I think that is something that should be considered and probably should have been mentioned in an article from Numismatic News, but I digress. But it is interesting to see how people's take on this and what's going on. It's easy to get frustrated when the prices are low, but something to keep in mind as well is that the physical market, it's tight right now. It's tough to get supply. It's never really fully recovered from the supply crunches we had before. And again, that does not mean that gold and silver, that there's a shortage of gold and silver. It just means that the supply chain is disrupted to get silver product out there. And I believe we may see that happen again as prices creep down lower, which means that there will be, again, a further decoupling of silver spot price with the physical metal price. How do you recognize that decoupling? When does it become something of a noticeable item? Well, it's when you get more than spot. When you sell your generic silver, especially your generic silver, when you are given more than spot from your local coin dealer or an online dealer, that is when you know. So there you have it. Let me know what your thoughts are in the comment section below. Will we see gold and silver soar before the year's end? The author seems to think that that's not going to happen. I don't think it will happen either, but I'm still bullish, and I think that we could see gold touch $2,000 by the end of the year, and silver touched 30. That sounds even crazier now than it did at the beginning of the year, but hey, I'm going to stick with it. Let me know what your thoughts are. A multitude of gratitude to you all. I want to encourage you to please rate, share, comment, and subscribe.